Hello, welcome to Financial Freedom with Jewel. Today we're going to talk about what velocity banking is and how it can speed up paying off any of your loans. But you know me, give me one moment. I'll be right back.
You know I'm a stranger,
Okay, as promised, today we're going to talk about velocity banking. What exactly is velocity banking? Velocity banking is basically a method that's strategically used to speed up paying off your loans, whether it be a car loan, credit card, student loan debt, mortgage, in record time. The goal of it is to eliminate the amount you pay in interest and to hit the principal at a accelerated pace. Okay, here's an example. Take a look at my chart. This person here, they have an income of $49.77 after their taxes. They have expenses of $44.77. In their cash flow, you guys, that is how we use velocity banking. They have a cash flow of $500 left over at the end of every single month. But because I know I've done it, if you don't target your money and tell it where to go, you're gonna wonder where it went. You have to be strategic with that $500. And it's in this example, the people here, they have a car payment. Now that car payment is $414 at 5%. If we break that down further, they're putting $322.59 on the principal when they make their payment. The bank is actually saying, okay, $322 is going to go to your principal, and we're going to go ahead and we're going to send $91 to the interest. That is the bank's way of saying, thank you for your service. Because I loaned you my money, this is the cost of doing business. Now, this right here, I think it was like a 5-year loan, you guys. And this loan, maybe 5 or 6. But anyway, I digress. If they continue on that cycle, they're going to give the bank $2,900, basically $3,000 in interest alone, just to borrow their money. And they're also going to have more time in that loan. So with velocity banking, because we have $500 here, we're going to take that $500. Now remember, with velocity banking, the method that I use and I encourage others that I support and I help is to always allot fun money. Fun money is something like your nails, your hair, outings, fun things you enjoy doing at the end of every single month. Make it a part of your budget, only because if you don't have something that you're actually seeing, you're working on your budget, right? But you want to be able to say, while I'm working on my budget, I do want to be able to have a good time and have fun. That way you're not feeling like, oh my gosh, this is like a diet, it's so restrictive. Allot your fun money. You want to go out to eat? You want to go ahead and go to the movies? Take that money out. This budget right here has all those considerations in it. Therefore, that $500, you won't be apt to try to go in there and spend that money because you've already allotted in your budget some set aside funds for you to have a good time with. So let's go back to that. With that fun money, it's already in there. You're already enjoying yourself. You're already having fun. $500 can go directly towards paying off that car loan. Why sit in a car loan for 5 or 6 years when you can get out of it in 2 years? So here we go. With velocity banking, that $500 is going to be our goal. We're going to contact our debtor and say, hey, listen, I have this car loan with you. I want to send $500 a month, not to the car loan because they're just going to put it on the back of that loan. I'm going to send this directly to my principal. That's it. Directly to your principal. Now you are still going to make your normal your payment every single month because you're just going to go ahead and make your payment. But instead of them putting, let's say $322.59 towards the principal, you're not going to have $822.59 going directly into that principal. You guessed it. That is how we pay down debt in record time. People think, well, you know what? It's just basically paying extra payments. Yes, it is. It's all that, but you're being strategic and you're targeting that. Not once every year, not once every quarter, or once every 6 months. You're doing that every single month, thereby eliminating the bank, charging you all the extra interest, also paying that car off on record time. Typically with cars, when it comes to that 5 or 6 year, they're pretty much ready for a trade-in. But in this case, let's just hope that you keep that car up and you get your oil changes, you get all those things you have to do, your liquids, your fluids, and all those things changed out. That way that car is going longer than what you maybe anticipated for it to go. Okay, so if you continue to use this velocity banking strategy, remember, it's just basically working with positive cash flow. Now, there are videos where you can actually follow along to show you how to actually find cash flow. I had a couple who, they were high earners, and we looked at their finances and like, oh, we bring $11,000 a month. But guess how much they spent out a month? $11,000 and I want to say $11,020. They were over their budget by $20 every single month. They're like, where's our money going? Well, we just said, you know what? When it comes down to it, you guys have all these loans, you're managing them well, but at the same time, you're doing a loan. Let's look at taking out, yes, I'm going to add it, a line of credit, because they did not have any cash flow. They couldn't see it. So what we did was we did a line of credit for that couple. We showed them how to actually insert all their income into that line of credit and pay their bills out of that. Kid you not, you guys, we're able to find them $5,000 easily by putting all the income in one area, all those loans in one area, using a HELOC. And what we did was we just redistributed their income. So we just showed them that when you make like car payment, house payment, mortgage payment, maybe you have 2 car loans. If you separated those loans out, what you're gonna do is you're gonna find yourself paying on each one of those 5 years, 6 years, whatever the term may be. But if you put those all together in a line of credit, you're gonna dump all of your income into the line of credit, and you're gonna pay all your bills. One bill, you guys, one lump sum out of the line of credit. It does work, but that's a little bit intense. But if you follow videos, you'll find out how to do that. I paid off about $54,000. I didn't get a second job. I did not go ahead and say, oh, I got to rob Peter to pay Paul. You guys, I got strategic with my finances, and in less than a year, I paid off $54,000 in debt. Matter of fact, in that short period of time, I actually paid off a car, brand new car, in record time. You can do that. So remember, velocity banking is not hard. People say it just doesn't make sense. No, it does make sense. You're being strategic with your money. You're targeting a debt and you're paying that debt off completely, annihilating it. Can you imagine instead of maybe 5 years, they paid that car off in 2 years? And on top of that, you can invest in things like stocks. You can invest in things like mutual funds. You can invest in a high yield savings account and get a return on your money. So the $500 is now beginning to work for you, for your future, for your retirement. It's going to help you. So I'll say this in closing. With velocity banking, now we've actually targeted, we've hit that car loan. We paid that car loan off in 2 years. Let's next look at credit card debt. Let's just hit one at a time. Whether you do snowball, avalanche, any of those kind of debt tools, it's a good thing to do and it's a good thing to use. But if you can lose velocity banking, you have cash flow. Do that, because that's going to run things down in record time.